Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Monday, August 30th, 2021, and I'm pre-recording this Trading Places Live for Tuesday, August 31st. Currently, futures, well, let's take a look and see where they are right now. They were up a little bit, actually mixed right now. Dow futures currently up 16 points. S&P 500 futures up 1.5 points, and NASDAQ futures down about 4.25 points. NASDAQ led today. We're going to get into all that in just a minute. First, let me walk you through today's agenda. So we're going to start off with the daily market recap, as we always do. Then we'll get into talking technically, chart breakouts. I'll show you how I do scans sometimes if I want to get a lot of different stocks into a chart list so that I can then look at a bunch of stocks at once. I'll show you how I go through and do all that during chart breakouts today. Then earnings spotlight, and we will wrap it up with the 3 you must see. But before we do any of that, let me take you over to earningsbeats.com. This is, of course, my site where I am Chief Market Strategist. If you're new to Earnings Beats, love to have you come over and check our site out. We do have a no-cost 30-day trial. You will have to give a credit card so we get you set up in our system, but you will not be charged till the end of the 30-day trial. And we do send out to your email a few days ahead of time. We let you know that, hey, you're coming up for the end of your term, and you're going to be charged if we don't hear anything from you. So we do try to give you warning on that. But anyhow, it is a no-cost trial for 30 days. We'd love to have you. If you just want to check out some of the things that are important to us at Earnings Beats, just scroll down at our homepage and find this area here, and you can subscribe to our free Earnings Beats Digest newsletter. This does not require any kind of credit card. All you have to do is type in your name and email address, hit that subscribe button. This is a very brief newsletter. It usually focuses on one stock or one topic, normally a couple paragraphs, one chart, very quick. We try to send it out usually around 8:30 or so in the morning Eastern time, so about an hour before the market opens. And it's sent out on Mondays, Wednesdays, and Fridays. So it's 3 times a week, completely free, no credit card required, and you can unsubscribe at any time for whatever the reason. So we'd love to have you try that out. We do have thousands and thousands of folks in our Earnings Beats community, and we'd love to have you if you're not already part of it. But anyway, just always like to give everybody an opportunity to come over to earningsbeats.com, check us out. Love to have you try our paid service. But again, you do get that for 30 days for free, or if nothing else, try our free Earnings Beats Digest newsletter. All right, let's move on to the daily market recap and take a look at the action on Monday. Now, we did see the Dow Jones Industrial Average finish down 55 points, but the S&P 500 and NASDAQ both set new records. So the S&P 500 now 45,2879. It seems like almost every day now we're setting a new record on the S&P. Monday was no exception. The NASDAQ up 136 points, almost a full percentage point on Monday. So 15,265. It looked like just a week and a half, 2 weeks ago, looked like we might be breaking down below the 50-day moving average. And now here we are for the second straight trading day, breaking out the all-time highs. So the NASDAQ, after getting a little bit of a pullback and seeing some rotation away from some of those NASDAQ names, money rotating very, very heavily back toward that group. Look at that AD line breaking new highs. Same goes for the S&P. Very, very strong action on both of these key indices. Mid caps, small caps, both took a break along with the Dow. You can see mid caps had a very strong finish last week. We did pull back a little bit today, about 0.25%. Small caps down a little bit more, about 0.6%. But I think both of these continue to look solid as well. Obviously not breaking out, so not looking as strong as the S&P and the NASDAQ, but that's the nature of this rotation. Not everything's going at the same time. So we see some areas of the market just kind of hanging out, consolidating, while other areas lead the market. And then that area gets tired, maybe gets a little bit, too far ahead of itself, start to see some slowing momentum, and then money rotates back into these other areas. As far as the sectors go on Monday, real estate broke out again. Real estate, middle part of the day, was not among the top 3 or 4 sectors. So it did really start to take off later in the day, made a breakout. It's had this issue with slowing momentum for a while. And while we really haven't seen a whole lot of rotation out of real estate, it hasn't been keeping up with the S&P. You can see it's been mostly sideways, moving up ever so slightly, while the S&P has been continuing to push higher and higher. Well, real estate decided to be part of that on Monday, gained more than 1.2%. Technology, discretionary, and communication services. These are what I consider to be the 3 most important aggressive groups. All 3 moving to, well, in the case of discretionary, not to a new all-time high, but technology and communication services, both to new all-time highs. Discretionary, after testing a multi-month low down around 175, last 2 months, 175 has been the low. We tested that about a week and a half ago. And now here we are, 1 solid day away from potentially moving back to a new high. So, and discretionary, if you look, had that higher price, lower PPO, a little bit of negative divergence there, went back, hit that prior support low, and now starting to move higher again. So watch for a breakout through 185 on discretionary, the XLY. That would be very bullish. And then financials, the worst performer. I'll talk about the 10-year Treasury yield in just a minute, but 10-year Treasury yield did fall, and financials fell as well. Financials tend to struggle when money is rotating into bonds, and when the yields are going down, that tends to send money rotating out of financials and into some of the other areas of the market. But we did put in we had a breakout on Friday above that earlier high back in second week of August, but we did fail to hold that, reversed off of it. So hard to tell where we go here, although I would suspect that with Treasury yields moving more sideways, I think financials probably are going to do the same. So I would say somewhere 37 to the downside, 39 to the upside is kind of what I would look for in the very near term until the XLF can break out of that area of consolidation. All right, 10-year Treasury yield was down again, as I just mentioned. So it was down about 3 basis points, 1.285% is where we finished. The important takeaway here when I look at the 10-year Treasury yield is that we have no trend in play. You might say, well, we've been down for the last 2 days, so we're trending lower. Well, no sustainable trend is really what I mean. When you have a sustainable trend on a daily chart, normally what you'll see is price action above the rising 20-day, which is above the rising 50-day. And that's essentially what we had really since the beginning of October, but especially since the beginning of the year. We were pretty much just trending above the 20, which was trending above the 50. Everything's rising. PPO's well above the center line. Then we went through a period where you can kind of see we went below the moving average, back above, back below, back above, back below, above, back and forth. That's trendless. When you're not holding on to moving averages as support or resistance, then you're basically trendless. There is no trend in play. And so that's really what we went through for a couple of months. Once we broke down below this prior low here, went really moving below 150, 145, something like that, that's when it started to look more and more like we were downtrending. And as we would move up, we really struggled at that 20-day EMA before rolling back over to new lows. And so you can kind of see that being a trend to the downside with the 20 below the 50 and everything moving lower. Well, then we put in a positive divergence, went through the 20 back to the 50, and I think have now set the boundaries of this period of consolidation. The upper end is this double top now around 138. The bottom end is this double bottom down here around 114, 115, maybe at the ultimate low there, maybe it was 113, something like that. But in the meantime, what I expect is that we're going to go back and forth until we can either break out above 138 or break down below about 113, 114. And I'm talking about percent, 1.13%, 1.14%, or break out above 1.38%. Until we can do that, I would be looking for more of the sideways action where the moving averages just don't matter. just like back in this 2-month period. The moving average just didn't matter. We go through it, didn't mean we were going to start uptrending. We went back below it, didn't mean we were going to start downtrending. We just simply were going nowhere. I think that's where we are now in this stage. So let's see. Now, we do have a couple of catalysts coming up this week in terms of economic reports. Anytime we get into these employment reports, Wednesday is the ADP employment. And then, of course, Friday is the more important non-farm payrolls. That can have a major impact on Treasury yields. So if these reports come and go, and we still haven't broken out or broken down, then I feel pretty comfortable that we're sideways consolidating, which probably means financials are not necessarily going to be outperformers or underperformers. Same goes with industrials. Ultimately, I think both those groups, financials and industrials, would like to see a breakout to the upside in the yield. All right. So that is it for the daily market recap. Let's move on to talking technically. And what I really wanted to focus on here today was that NASDAQ 100, the NDX. I mean, since we went down and hit this 50-day moving average here just a week and a half ago, I mean, we have really just been rolling to the upside. I'm talking almost 1,000 points on the NASDAQ 100 in just the last 8 trading days. That's a lot of points in a very short time frame. And now we've got that daily PPO moving up. This now is starting to look much more like a trend to the upside. So I would be favoring that 20-day EMA as key support on any pullback. And I would not be looking for another 50-day test right away. I think this is a new uptrend that has begun. Earlier, I talked, because I also do shows over at Earnings Beats on Mondays and Wednesdays. I do live shows at 9 a.m. Eastern. If you're not familiar with that, if you go over to Earnings Beats right here at the top, Trading Places Live, if you click on that, it'll take you to a page. And right now it's got the recording for what I just did on Monday morning. But on Wednesday morning, if you come in here, there will be a link where you can come into the room. So all you have to do on Wednesday morning, probably around 8:40 or 8:45, the room will open. Come in here, hit that Trading Places Live, look for the link, and just come into the room. Love to have you. But for right now, I say the NASDAQ continues to move higher. And so I think we'll want to continue to monitor that. But I love what's taking place here in not only the NASDAQ 100, but in the component stocks. So here what I've done is I've pulled up the NASDAQ 100 components. And we've got them listed here. And this is just what's happened today so that you can see what was lifting this index today. PayPal was number 1. Then we had Apple. And I want you to look at some of the big names here. Apple was 2nd on the list. Tesla, 4th on the list. Amazon, 6th. And Facebook, 7th. These 4 stocks are very, very influential in how the NASDAQ 100 performs because it is market cap weighted. And as we know, Apple, Tesla, Amazon, Facebook, we are talking about mega caps. So when they're performing well, the NASDAQ 100 is going to be performing well. So I wanted to point that out. The other thing I wanted to point out was PayPal. During the day, they had news come out, which was unusual to see that during the day. But they came out, and I'll show you the chart. See if you can pick out when the news came out. Here's a 5-day chart. So this over here was today. I think if you look at the volume spike and you see this huge move higher, you can probably guess that's about when the news came out. And you'd be right. They announced that they're going to offer a stock trading platform. And so immediately I saw PayPal taking the move up. This was about 11:40 Eastern. I want you to take a look at Schwab at 11:40 Eastern. Look at the big move down, the volume pickup, and then the selling later in the day. So you've got other areas of the market. I didn't even look at Robinhood. I probably should have looked at that one as well. Well, right about the same time, you can see Robinhood also taking a hit and selling off into the close. So you see the opposite effect, the other companies that were being impacted negatively by PayPal's news. And then, of course, PayPal itself had the positive news pulled back and then rallied into the close, opposite of both Robinhood and Charles Schwab. So PayPal was definitely an interesting part of this. But I also wanted to talk about those other companies, the big companies that I mentioned. So I thought I'd pull up first Apple. And I'm going to show you Apple a little bit later when we get into chart breakouts, because we did have a breakout on Apple. And check out the volume. Now, you've got to be a little careful sometimes, because you look at this, you say, well, the volume's not very great. Well, you also have to keep in mind that the price is higher. So the dollar volume, while the actual share volume might appear to be low, the dollar volume is not nearly as low. And that's something that, you kind of have to train your eye to take a look at. But I think this breakout on Apple is certainly noteworthy. And I expect that we are going to see higher prices ahead for Apple. Tesla. Tesla made a pretty good move at the close today. You see volume ticking up a little bit, and it closed at its highest level since back in April. So I think the highest close or open was around 723 and change. Today we closed at 730.91, near the high of the day on increasing volume. Good news here for Tesla. This certainly looks like it wants to go higher to me. Amazon, after gapping down with earnings, big sell-off, heavy volume. We had that recovery, but after those earnings came out at the end of July, you can see we pulled all the way back down to about the 31.75 area. And notice just on Friday, we closed back above the 20-day for the first time. Volume picked up today on Monday, and you can see Amazon finishing at the highest level since those earnings came out. So that was kind of a big deal for Amazon as well. I believe Amazon is doing nothing more than just consolidating before it goes higher. I know that was a big sell-off with earnings, and it continued lower for the next few weeks. But I really believe this is the start of just further consolidation before an ultimate breakout down the road. All right. Let's move on to chart breakouts. So what I did, and what you see here is a chart list. There are 93 companies on here. I've already pared it down quite a bit, but what I want to show you, if I go back over here for a second, let's go to the dashboard. I want to show you how I did this, because I did it pretty quickly. If you go in and you look at your scans on your dashboard, so you go to your dashboard and then hit your scans, under this more button over here, if you click on that, you'll see predefined scans. So I click on that, and one of the best ways to just go back and take a look at the 52-week highs is to look at this very first line under the predefined scans, which is new 52-week highs. And there you've got New York Stock Exchange and NASDAQ. Those are the two that I normally will look at. Now, you can go into mutual funds. You can look at stocks from different exchanges around the globe, or you can just hit the total. But I just want the NASDAQ and the New York Stock Exchange. So what I do is I'll pull up New York Stock Exchange. And if you want to know how a scan is written to come up with these results, you could click here, and you can see exactly how the scan is written. But usually what I'll do is I'll just take all of these stocks and I'll just put them in a chart list. I'll either store them in a new chart list or I'll replace them in an existing chart list. Okay. Once I have them in a chart list, then I'll go back and look at the NASDAQ, and then come over here. And instead of storing in a new list or replacing, what I'll do is I'll merge these results in with the chart list where I just put the New York Stock Exchange 52-week highs. So then I've got a chart list now that quickly has both of these two, the NYSE and the NASDAQ 52-week highs. Now, if you go through the actual list of the NASDAQ, you're going to see ETFs in here. You'll see stocks that maybe didn't trade many shares. Like here's a stock. Well, this is a ETF, but it has the volume in here. And many of the stocks, I want to make sure that the stocks have, like for instance, here, this one, BCPC, setting a new high, but it only traded 146,000 shares. Here's 120,000 shares. Here's 190,000 shares. I want to make sure that there's an X level of shares being traded. So after I get all of these into a chart list, then I'll run a scan of my own against the chart list. And so I'll make sure, for instance, I look for the scooter between these. If I pull them up in order of scooter, you'll see start at 99.9. Many of these stocks are already so overbought, I'm not even interested. I want to see stocks that are just making breakouts. So for me, I actually ran a scan against this chart list that included scooters from 60 to 90. So I ignored everything over 90. I also removed all of the ETFs. And then I had a volume filter in there to take out stocks that, didn't meet my volume requirements. For me, I wanted at least 300,000 daily over the last couple months. And after I did that, this was the scan results that I got, 93 companies. And I think if you looked at the, 400 and something, if you added those New York Stock Exchange and NASDAQ 52-week highs, I forget how many was on that list. Let's go over here and check it out. 291 and 172. So that would have been 463. I actually reduced it down to 93 by running the scan I did against those. All right. So now what I can do, though, now I have a very manageable list, 93. I like to pull them up in candle glance because what I'm looking for, I should be able to find. I want to see sideways consolidation and a breakout. Apple is exactly what I would look for. Had a big move up and then it consolidated for a while and now it's making a breakout. This one's been going up. It's got a negative divergence. This one's pretty, been going up pretty much. Again, I'm just looking across. Okay, AOS looks like it's been doing a lot of sideways consolidating, but is it breaking out on big volume? No. Okay, I'm skipping that one. Atco, volume's kind of so-so. It looks like it's making a breakout, but I'm looking for something better. Just looking for whatever I can find that's been sideways consolidating, volume picking up. And I mean, I haven't gone through this list, so maybe I won't find anything. Here's one. I mean, Duke Realty, in that real estate group, making a breakout after sideways consolidating. Volume looks nice. But I just went through 30 stocks very quickly, just seeing if I can find anything that really just kind of, First Industrial Realty, volume picks up. There's a breakout. Looks like real estate. Some of the real estate stocks maybe making some sense. Let's see what else. A little consolidation here. Invitation Homes, INVH. Got up to 41, pulled back, maybe a little bit of a cup handle breakout. Volume, I'd like to see a little bit more volume there. So I'm gonna be a little picky here. Yeah, I'm not really seeing. I'll go to the last page here and see if I can find another one. But anyway, that's the way I would go through and kind of look at these just to see if there's anything that's breaking out after sideways consolidating for a while that would really look interesting to trade. So anyhow, hopefully that gives you some ideas. Next up, let's take a look at the earnings spotlight. We're just going to spend a minute here. Zoom reported after hours. And I'll tell you right now, this company just doesn't seem to be able to come up with anything that impresses the market. And I think it was because the stock ran up so much that no matter what growth they come up with, it's not going to be enough to justify their market cap in the eyes of a lot of folks. Personally, I think this stock should trade at a tremendous multiple, but that's just me. They did beat on their top line. They beat on their bottom line. They raised guidance and the stock's down 12% after hours. It was back at 305 last time I saw, 347 at the close. So I think the stock's got a decent chance to go all the way back to 275 at this point. I'm going to be a buyer of the stock. I love the fact that they beat both. They raised and the stock's going down. I think this is an opportunity for the long term. And so I will absolutely be a buyer tomorrow. I might be buying at the open. I might be adding on any weakness, but I will be watching this 275 level. I don't want to see a close back below there. Other companies that reported, STNE reported, and by the way, Zoom's earnings 136 versus 116. I mean, nothing wrong with what they're doing. But again, folks are like, well, their growth isn't good enough. Well, they just beat estimates. So the estimates, it doesn't make sense because if you got estimates at 116, then you should be using that to calculate growth rates. So if you come in better than 116, you should be coming in with better growth than what's expected. So the whole thing doesn't make a whole lot of sense to me, the excuses that are used. I think this is a stock that continues to consolidate after such a huge move in 2020. And I think it is going to catch fire again, but we'll have to wait probably another quarter for it. STNE, 32 cents versus 15 cents. But despite those better than expected earnings, STNE, you can see it's been downtrending for a while. This is a stock that the market has not really favored. So I think the market was still expecting, whether it was good news or bad news, the market was not buying this company heading into earnings. And if this is in the software space, software has been doing really well. But STNE, as you can see, at a 52-week relative low, stock's down another 5.5% after hours, even despite beating on their bottom line. Now, I didn't see their guidance. Maybe they lowered, but still not great results there, not great reaction. And then Nordson, NDSN, making a breakout heading into earnings. They beat 242 versus 212. Wall Street seemed to like this company a lot more heading into earnings and got more of a positive reaction. The stock was up a couple percent after hours. I do want to mention on Tuesday, CrowdStrike will be reporting. That stock has been performing much better of late. I think we're going to have a big report out of CrowdStrike. And then you've got NetEase reporting tomorrow, and that company has not been performing well. I'm not expecting much there. All right, let's move on to the final three you must see to wrap this up. I looked at companies that had performed pretty well in terms of their scooter ranks. You know, they had the scooter mover, they were moving higher. And so I thought I would take a look from each of the large cap, mid cap, and small cap stocks to find three companies for us to look at and see what they look like on their charts. One was Etsy. I love this move up, this breakout above this double top. I think the AD line is confirming this move to the upside. I think Etsy is going to make a run for that March high at around 250. Next up is FLWS, 1-800-Flowers. You know, a couple of days ago, end of last week, this was earnings related. Big volume. We gapped down. Looked like we were breaking down, and big hollow candle. There was a lot of accumulation. We pulled back on Friday, and then on Monday, today, earlier, we actually closed at the highest level we've seen since back in the second week of July. So I think 1-800-Flowers is actually starting to see some accumulation. That AD line starting to move, and I think the stock's going to make a run back toward those earlier highs in 2021. And the last one I have here is AQST. This is a small cap stock. And I really liked the move here in the breakout above this June high. We've been sideways. Well, we were sideways consolidating. Then we were downtrending. And then we started sideways consolidating, put in this double bottom. And this high was important because it's between this double bottom. We cleared that on Monday at the close. So I would suspect, obviously, a pullback to test that 20-day is possible anytime. But I suspect we're going to see some higher prices ahead on AQST. All right, that's it for me. I appreciate everybody tuning in. Remember, join me over at earningsbeats.com for my shows on Mondays and Wednesdays. They start at 9 a.m. Eastern. Would love to have you. Everybody have a great day on Tuesday. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.